Ladies and gentlemen, good day and welcome to the Venky's Limited Q4 FY23 earnings conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Aniruddha Joshi from ICICI Securities. Thank you, and over to you, sir.
Yeah, thanks, Darwin. On behalf of ICICI Securities, we welcome you all to Q4 FY23 and FY23 results conference call of Venky's India Limited. We have with us senior management represented by Mr. N.K. Toshniwal, General Manager, Oilseed Segment, Dr. Vijay Tizare, General Manager, Poultry Segment, Dr. Edgaonkar from Poultry Segment, Mr. Deepak Khosla, General Manager, AHP Segment, Mr. J.K. Handa, Chief Financial Officer, and Mr. Rohan Bhagwat, Company Secretary. Now I hand over the call to the management for their initial comments. Post the initial commentary by the management, we will open the floor for question and answer session. Thanks, and over to you, sir.
Thank you, Mr. Aniruddha Joshi. This is Rohan Bhagwat, Company Secretary from Venky's India Limited. A very good afternoon and thank you all for joining us today for the conference. The company had published financial results for the quarter and year ended 31st March 2023 along with information for investors on 10th May. I hope you all have gone through the same. Today we have with us the unit heads to answer all your queries in respect of their respective segments and area of operations. Before we start discussing the company's performance, I would like to mention that some statements made in today's discussion may be forward-looking in nature and may involve risks and uncertainties. After the end of this call, in case you have any further questions, please feel free to reach out to the investor relations team. I will now hand over the call to Mr. Jeevan Handa, our CFO, to make the opening comments. Over to you, Mr. Handa.
Good afternoon and a very warm welcome. I am Jeevan Handa, CFO. Once again, I am pleased to interact with all of you on the Venky's earnings call. I hope you have gone through the results and the information to the investors. As you have seen, Venky's performance for the quarter and year ended 31st March 2023 has been subdued. In a challenging scenario where the poultry feed cost has been high, there have been some issues in terms of lower realizations from the sale of day-old chicks and grown-up broilers. Added to these factors, the performance of oilseed segment has also been affected due to lower realizations from finished products, that is, de-oiled cake and oil. As far as the current quarter is concerned, not much improvement has been seen in the month of April. Realization from the sale of poultry products has not been seen any major improvement. However, we are hopeful that the overall scenario will start improving in near future. Prices of poultry feed have declined by a reasonable percentage, and we hope that barring some external factors, the feed prices may not see big increase till March 24. With this briefing, we now would like to answer your questions. You may please go ahead with questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Once again, ladies and gentlemen, you may press star and 1 to ask a question. The first question is from the line of Akshay Krishnan from ICICI Securities. Please go ahead.
Yeah, hi sir. This is Akshay. So just wanted to understand what is the traction on the Horeca segment you're witnessing as in point?
Yeah, we from Venky's processed food division, we supply products to three segments, basically one for HoReCa, one for quick service restaurant chains, and one for the retail market. So these three segments are there, and when we supply to HoReCa, in HoReCa also we have two sectors. One is fresh chilled chicken with fresh chilled boneless chicken that we supply in, to the various restaurants and caterers, and also we supply frozen processed food products which are used for their own preparations for HoReCa sector. But in addition to that, lot many people consider HoReCa sector also as a QSR sectors. So let me update to you that we are supplying to around 8 QSRs, which includes KFC and Pizza Hut, Taco Bell, Nando's, and Venky's Express, Venky's Experience, McDonald's. All these organizations are there, and we supply to these people also.
Thank you, sir. So I just wanted to get some light on the RM outlook. So how do you see the price moving, and what is the overall outlook, and what will be the margin trajectory in the near term?
When we calculate a margin right now, when during the briefing of our CFO has already explained to you, so there was a cost of the cost of feed ingredients for the production of birds is reduced in this last quarter, and we are expecting a similar price reduction in the cost of production. And when there is a reduction in the cost of production, particularly for quick service restaurant chains, with some of the leading quick service restaurant chains, we have open costing with them. We share open costing. So it also reflects to them on our pricing. And we keep some margin percentage always with us while we supply the products.
So are we witnessing any inflationary pressure even going forward? Like, what will be your trajectory into it?
Yeah, there is a increase in inflation rate because of power, energy, water cost, and labor cost. This inflation we always consider while we prepare the costing sheets. But since we are dealing with these quick service restaurant chains over the years, and since we also share them open book costing, so that is convenient. That is not an issue. And in fact, we had almost closed all our pricing structure for next 6 months with all the QSRs to whom we are supplying.
Okay, great, sir. So since you spoke about the QSRs, I just wanted to get an understanding. How are we witnessing demand in the semi-urban areas, especially on the QSR space? So is there a traction, and how do you identify the spots into it?
Yeah, what we had observed is all these quick service restaurant chains are expanding more or less 10% plus and minus, and around 10% plus that is their expansion plan. And what we witnessed when these QSRs, they came into Indian market, particularly international QSRs, they started their operation in A-grade cities. Now, what we found is they are now also moving to B-grade cities, and where the demand is more and the appreciation for the product is also more, and that's how most of the QSRs, in our opinion, are shifting from A-grade cities to B-grade, maintaining expansion plans in A-grade cities also.
Okay. Great. So one final question, sir. I'll come back to the queue. So I just wanted to understand the volume numbers for the broilers, DOC, and the layers that have been sold in. So on the quarter and also on the value term.
In regard to broilers, chicks, day old chicks, which are we selling, last year we sold almost 11.31 crores against previous last year of 10.56 crores, and similarly for layer chicks for this year 22-23 it is 4.16 crores, whereas last year it was 5.03 crores in regard to the number. Similarly, commercial broiler birds, it was sold 8.63 crore kgs, and last year it was 8.29 crores. kgs. So this is in regard to the volume which we achieved this year as well as in the previous year in comparison to that.
Okay. Great. Thanks.
Thank you. Participants who wish to ask questions may please press star and 1 on their touchtone phones at this time. The next question is from the line of Keshav Garg from Counter Cyclical PMS. Please go ahead.
Sir, I wanted to understand that in all of our 3 segments, sir, if you could give us some idea that what kind of steady state operating margin should we expect in each of the 3 segments? Hello?
Just a moment. We are just coming back. Yeah. Oil segment 3%.
Oil segment 3%. So there are 3 segments. One is poultry and animal health product segment, and then oilseed segment. So in oilseed segment, there is a reduction in the percentage of margins because the raw material prices were on the lower side, and there was no opportunity in regard to the stocking and all those things.
Here the percent of margin in oilseed division, we can normally expect a 3% margin on the in the terms of value. And second thing, what happened is this is a commodity business, so there's a opportunity benefits are also there, which whenever it arises, that could be the additional profits for the division.
Right, sir.
Poultry and animal health product margins?
Yeah, animal health is a very stable business, and it's a margin of around 21 to 22% annually. That's the margin. Yes.
And so lastly, poultry?
Yeah, with regard to poultry, if you go through our past analysis from last 6 to 7 years, you will find that there will be exceptionally high profit and sometimes it's exceptionally low profit. As purely this poultry business is dependent on the raw material prices. So in our commentary also we have commented that the prices of soya and maize, basically that decides the margin of the profit with regard to poultry business is concerned. So with regard to poultry business, if a steady business goes, then we can expect a profitability of 8 to 10%. However, we have witnessed that there is no steady profit as such because the ingredient prices varies a lot, particularly maize and soya. So last to last year we have witnessed soya price as high as 100 rupees, and today the same soya price is around 50 rupees. So we can see a lot of variation with regard to ingredient prices. So it will be too hard to predict a steady profitability as far as poultry is concerned. Thank you.
Sure. Sir, also lastly wanted to understand so that in our investor presentation we have mentioned that non-volatile or less volatile manufacturing activities was approximately 71% of sales, and 29% or 1240 crore came from basically volatile segment. Sir, our total revenue from poultry segment last year was 1752 crores. So out of 1240 is volatile and 512 crore is non-volatile. So what is this 512 crore of revenue in poultry segment which is non-volatile?
Correct. Good question. With regard to poultry, as we say that we have 3 different segments under poultry. One is a processing sector, second is a SPF division, and third is a purely poultry division. So when we give this particular picture of 1751 turnover with regard to poultry, this 1751 includes SPF, this includes processing, and this includes poultry. Even in poultry, there is a further bifurcation that we do sell broiler hatching eggs, we do sell broiler chicks, we do sell layer chicks, and at the same time, we have integration division where broiler birds are sold. So when we talk of non-volatile segment, we consider processing as a non-volatile segment. When we consider non-volatile, we consider SPF division as a non-volatile. So though it is shown in poultry 1751, but if you further bifurcate this 1751, you will find that almost 400 crore of turnover will come from non-volatile, though it is shown in poultry. So this is the explanation with regard to volatile and non-volatile. That's why under SEBI we have published that 71% is non-volatile and 29% is a volatile. So when 29% volatile we say it's purely a poultry business, Whereas we recently explained that the profitability depends more on maize prices and soya prices, where the profitability can vary as high as and as low as. I mean, when we talk of last year, the profitability was very high in poultry division, 266 crore, and this year it's hardly 54 lakh. So this much variation when we calculate it as a volatile segment. So that is the explanation with regard to volatile and non-volatile.
Sure, sir. Well understood. And sir, lastly, sir, for you mentioned the volumes that we did in last 2 years, but for this year, sir, any expectation in percentage terms in terms of our poultry segment and oilseed segment, that what kind of volume growth we are looking at?
In oilseed sector, we are looking for about 7 to 10% growth in the terms of volume. As far as the value is concerned, we cannot predict the growth because the prices are market driven and quite speculative. So therefore, we normally plan out our growth in terms of volume, which this year we expect around 7 to 10% in terms of volume.
Sure, sir. And poultry?
We are expecting the same growth as far as poultry is concerned. However, when we talk of value growth, a lot depends on the ingredient prices and the realization of broiler birds. But as far as our target is concerned, we are expecting 8 to 10% of growth with regard to poultry business.
And sir, lastly, our animal health product revenues are totally flat year on year. So in this FY24, any growth is expected?
Yes, for animal health divisions, last year it was a flat because we were restructuring over new product lines. And we expect for 23-24, we are expecting a growth of around 15 to 17% in the coming year. Yes.
Okay, sir. Thank you very much and best of luck.
Thanks.
Thank you. Ladies and gentlemen, to ask a question, you may please press star and 1. We have the next question from the line of Aniruddha Joshi from ICICI Securities. Please go ahead.
Yeah, sir, just one question. How do you see the long-term opportunity in the branded product? So we have Venky's ready-to-cook products range launched many years ago. Obviously, it has done well to some extent, but still we see there is still a lot more scope for distribution and new product launches, etc. So what has been the update on that segment? And secondly, well, many QSRs are coming up. So how do you see the sourcing arrangements to these QSRs? Do you see that as a large growth opportunity for us? And as far as our revenue mix is concerned, which are the key QSRs that we are catering to, and where we see some definite potential for growth over next 3 to 4 years? Yeah, that's it from my side.
The key QSRs to whom we are supplying, one is KFC, then we are also supplying to McDonald's. We are also supplying to Vista Foods, who is also producer for products for McDonald's or their inter-company. And then we are suppliers to Pizza Hut, we are suppliers to Taco Bell, we are suppliers to Nando's. And then there are 2 more new emerging quick service restaurant chains which are expected in India. One is Papa John's. They are coming up with a big investment. And also there are certain expansion plans for one more pizza chain called as Little Caesar. So these are the new QSR chains which are coming. And we are in contact with the present QSRs to whom we are supplying products on a regular basis. As I explained to you in the last question, that more or less their expansion plans are around 10% plus minus. And there is a big potential for the sales. And we are not only the suppliers for the products to them, we are also developing the products for them. And what happens is they also do not want to keep the same products over the year. So we have a research and development unit with us. We work with their chefs and their executives, and we develop new products range for them. And the same product is further launched or rolled out in a market as per their plan, marketing plan. So this is for the QSRs. For the retail chain, we are already present in more than 6,000 retail outlets all over the India, which covers A, B, and C categories of cities. And of course, yes, there is a good expansion plan for us, and there is also a good expansion scope for these products. What we recently started actually after COVID or during the COVID, the business model is slightly diverted, or I will not say diverted, but we have an addition of the new range of same range of the products to be marketed through e-commerce. So now we are supplying our products to Swiggy's, Big Basket, Grofers, Zepto, and Danzos. So these are the people who are supplying our products to them. So when we say that we have more than 6,000 outlets, these are additional avenues open for marketing the products. Presently, we have about 34 SKUs for processed food branded products and about 12 raw branded products which are supplied in the name of Venky's. And we plan to launch certain new products in next quarter. And we feel that next quarter with the launch of these new products would be very well appreciated. Likewise, we launch our some new products in last financial year. Those were appreciated. So this also we will be planning for the new products in this. I think I had answered your question. Is there any question?
No, sir. This is very helpful. Just some housekeeping questions. How do you see the capex for FY24-25 and the dividend strategy for the company? Yeah. Thank you.
In regard to the capital expenditure for 23-24, it is a routine expenditure. Only one new project has been started, which is of animal health product. The estimated cost for the new project is to the extent of 50 crore rupees, which shall be funded from our own generations only, and no new funding is being taken. In regard to the dividend, that will be decided by the board.
Yeah. Thank you. Thanks. That's it from my side. Very helpful. Thank you.
Thank you.
Thank you. Participants who wish to ask a question may please press star and 1. The next question is from the line of Harsh Mantri from Flute Aura Enterprises. Please go ahead.
Hello, sir. Sir, my question is that since our business is very much exposed to volatility and pricing pressures, so what all measures are we looking at to mitigate that effect, and any strategic potential move which can help us insulate from such type of volatilities in pricing?
Yeah, if you go through the strategy of Venky's from last few years, the burden as far as volatile sector was concerned was more than 45 to 50%. So the more reliance was there on a live bird sale and more reliance was there on a chick sale with regard to broiler and layer. So slowly we have moved from this volatile sector and we have increased our businesses in non-volatile sector, in particularly processed food, in particularly oilseed segment, and in particularly AHP segment. So all that put together, by keeping the poultry, I mean the quantity and volume and value, to make sure that other volume and other value increases. So by that way we are reducing a percentage of volatile and we are increasing a percentage of non-volatile. That definitely will take care of uncertainties and that definitely will give some steadiness as far as overall profit is concerned. That is our strategy and that's where we are following, which is evident from last 2-3 years results.
Sir, any future diversification in terms of extending our offerings?
There is no diversification planned as such for the company.
Okay, sir. One more question. In terms of our inputs, as you mentioned that the prices of maize and soya have been booked up in the last year. So I would like to have a more discussion on what is our strategy in purchasing of raw material, how much stock do we hold, and what is the overall process in the same.
See, as far as this holding and inventory, this thing is it is not some sort of a fixed strategy. It depends on the perception what we see for the future market. Right now, last 1 or 2 years, there has been a very different change from the market. Earlier, whenever the arrival of crop used to be there, the people will stock the material, and in the off season, maybe April, May, June, the prices will shoot up and the benefits will be accrued on that account. But now these days, what happened, the crop of our maize and soya both have been growing up in the country, and the holding at the farmers level, agriculture farmers level are also very good. Over the last couple of years, they have got a very good price. So now these days, the availability of both the materials are throughout the year it is available. Question is only the price. Whenever the prices are good, material comes good in the quantity. Whenever this thing they hold, so it is going on continuously, and material is throughout the year available. So we cannot have a fixed strategy now for the storing the material for a longer period.
Okay, sir. Thank you.
Thank you. To ask a question, ladies and gentlemen, you may please press star 1. The next question is from the line of Keshav Garg from Counter-Cyclical PMS. Please go ahead.
Sir, I'm trying to understand, sir, you explained about the raw material prices due to which we got hit. So, but as far as the demand-supply equation is concerned in poultry products, especially in broiler chicken, let's say. So, what is the demand supply, sir? Is there an oversupply? And if not, sir, then why is the industry not able to take price hikes?
Yeah, thanks for this question. For this, I would like to take you to the broiler bird prices of last 3 years. When we see the last 3 years prices post-COVID, we can see that during the period of COVID, the broiler prices or the realization to the net farmer was approximately 70 to 72 rupees. So that 72 rupees benchmark has gone to 78 rupees to 80 rupees. So ideally, this should have added 8 to 10% of the profitability. But unfortunately, the prices of maize and soya, which then was around 15 rupees to 16 rupees, has moved to 22 rupees to 23 rupees. And the same with regard to soya, the prices which were somewhere around 35, 36 rupees has gone up to 66 rupees and 67 rupees. So when your input cost is going more than 20%, the realization ideally should go 20%, but that never happens in consumer market. Consumer market, when customer is used to paying for 70 rupees, suddenly he is not changing his benchmark directly to 85 rupees and 90 rupees, though your production cost changes. So this is the basic reason we get hit when the prices of ingredient changes. The price benchmark for consumer, it takes a time to absorb, adopt, and then change. So usually the period required is 1.5 years to 2 years to accept and adopt if sudden abrupt change in the prices are there. So this phenomena which we have observed post-COVID, that the prices of ingredients, particularly maize and soya, has gone up like anything, but the same price to go up as regard to broiler price, it took us almost 2.5 years to 3 years. Today's benchmark for poultry is 90 rupees to 95 rupees is well accepted, which was not the case 1.5 years, 2 years back. So this 95 rupees benchmark is accepted by the consumer. Tomorrow, if maize price and soya price comes down, and if your cost of production comes to 80 rupees, one can see a sudden surge in the profitability, which may not be the true picture of that particular situation. So this is what is happening in poultry. Either there is a sudden increase in ingredient prices and the realization is also moderate, and other way the realization is good and the cost of production is going down. So this is the reason why you are seeing an abrupt change in the profitability with regard to poultry division.
Sir, what I'm trying to understand, sir, the point you made is well appreciated, sir, but what I'm trying to understand is that if we see past 2 years, FY23 and FY22, then the poultry segment, sir, it has really not made any money for us, sir, and it should be a fair picture for the rest of the industry also. So many small farmers must have gone out of the business due to losses, etc. So that would have reduced the supply, sir, and as the demand is quite steady, so will that not lead to increase in basically prices and realizations of poultry products?
Yeah, that phenomena was there when COVID came in the period of 1920 and 2021. You can see that 1920, lot of small farmers, they have reduced their operation or closed down their operation. the benefit of which has gone to organized player. But over a period of time, when prices started stabilizing, those small and medium players, they have restarted their operation. So in poultry business, small and medium farmers are not completely closing down their operation. It's a suspension of the operation by medium and small player. Because the cycle is short, so these people usually, whenever the period is good, prices are good, they restart their business. So this phenomena by small farmers and marginal farmer is on phenomena. It is not completely on or it is not completely off phenomena. So this is the reason why you will find that there is a regular increase in the consumption, which is to the tune of 6% to 8%. But whenever the production is high, realization is less, input cost is high, that time it takes a hit on the profitability, particularly realization and cost of production.
Sure, sir. And so lastly, wanted to understand, sir, that even though on the poultry side, broiler side, things are lukewarm, sir, if we look at egg powder exports from India, they are probably at an all-time high, and all the companies in that segment they are really, I think it's the last 1 year is the best ever year for them, listed players like SKM, etc. So are we not present in that segment at all? Can't we just export our eggs?
Yeah, actually, your point is valid and well taken. But thing is that right now your company is not into egg processing segment.
Okay, sir. Okay, sir. Thank you very much.
Thank you. Participants who wish to ask questions may please press star and 1. As there are no further questions, I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Thank you all again for joining us for this Concall. We are very happy to answer all your questions. In case if any question has remained unanswered or any further details are required, we request all to please contact our investor service team. We will be replying to all the questions. Thank you all and thank you ICICI Securities. Thank you.
Thank you. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.